Hi there, a very good afternoon, good morning to everyone, depending on wherever you're watching me. This simply stocks, and I'm here with another video. And this time, this video corresponds to a healthcare company that has performed well over the last few quarters in terms of numbers and promoter holding, etc. So, a very interesting company to look at from a 3 4 year perspective. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever discussions with respect to markets and stocks I have is purely based on my experience into the market for the last 10, 12 years. And whatever decisions with respects to markets and investments you take, kindly do take that on note that it is laden with market risk, and do consult your financial advisor. Now, before I talk about this company, a small request is kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership on Patreon, or you get a membership on WhatsApp or YouTube, you get access to my portfolio, my watch list, which I keep updating every month, analysis on different companies, discussion on domestic and global economies, and discussions on the overall market as well, where it is headed, whether it's in Europe, US, or here in India. And whatever queries you're having, I'll be answering that. I have started the YouTube membership as well, so those who cannot be on Patreon can be a member on YouTube and will get the same, you can say, benefits as on Patreon. It's a monthly membership there, so you can check it out. The link will be in the description. Now, in order to discuss about this company, let me take you to the screen, a website. So we are going to talk about Fortis Healthcare. Very interesting company, a large, you can say, hospital, especially in north of India, and it's a 50,000 crore market cap company. So a larger mid cap company, safer bet to take for from a 3 4 year perspective. Now the company has done exceedingly well over the last year and a half in terms of its numbers. So let me give you an idea about the company or this hospital overall. So Fortis Healthcare was incorporated in 1996, and the company had facilities, healthcare facilities from 2001 onwards. It is a leading integrated healthcare service provider here in India, and their healthcare verticals primarily comprises of diagnostic, daycare facilities, as well as specialty care. And currently, the company operates its healthcare facilities, etc., services in India, Nepal, Dubai, and Sri Lanka. So they have it abroad as well. 36 healthcare facilities at the moment, and with approximately 4,000 operational bed across the globe. That's what the company is has been, or this hospital has been performing. So 27 hospitals including JVs with 4,500 operational beds, 5,500 doctors, 6,500 nurses. A pretty expanded, you can say, business that they have. NCR, they have around, in terms of bed split, NCR is the major one. So in, you can say, Noida and Delhi region, they have, or the capital region, they have the best. Then West Bengal around 300, over 300 beds. They have, you can say, hospitals in Chhattisgarh, Karnataka, Maharashtra, Rajasthan, and Punjab. So widespread, and they are spreading pretty quickly uh, at the moment. So in terms of revenue mix, hospital business is there, plus non-surgical revenue business is around 42%, and then there's surgical revenue that is around 58%, which has a higher margin. uh, in terms of diagnostic, business to business is around 46%, and business to customers is around 54% as we look at it. So overall, probably most of you would know about this hospital, but look at the way the stock has performed over the last 1 year, from around 350, 360 rupees, 370 rupees. The stock has gone up to around 650, 700. It has doubled over the last 1 year, over the last 3 years also. It has performed reasonably well. Now, in terms of numbers, if you look at the numbers in the September quarter, they did around 2,000 crores of sales, versus around 1780 crores of sales in September last year, which is a decent 10%, just over 10% jump. But you look at the profitability from around 330 crores of operating profit has gone to 435 crores. Margins have expanded from 19% to 22%, a 300 basis point jump on the margin. And in terms of bottom line as well, they've done 233 crores of profit before tax last year, which has now grown to around 261 crores this year. Interest burden has increased a bit, and there has been a little bit of, you can say, larger depreciation that has kicked in, due to which the numbers look a little bad on the bottom line. Plus, in terms of other income, they had an exceptional item. So in September quarter, they had another income of around 18 crores, whereas this time around they had another income in that they had a loss of around 42 crores. So if you look at it, there was an exceptional item of around 60 crores negative they had to put in. Otherwise, the other income would have corresponded to around 18 crores positive. So if we take 18 crores positive as other income rather than 42 crores, so we we take that upfront, and then we say that profit before tax would have been closer to 320 crores versus 233 crores. That is would have been a decent jump of around 40% on that profitability on the bottom line. So overall, very good, very strong numbers that are coming in terms of balance sheet. Also, they have around 7,000 crores of cash on books, or reserves on books. Borrowings are less. In terms of shareholding pattern, if you look at, 31% is with the promoters. FIIs currently hold 25%. DIIs have a holding of around 30.7%, reduced a little bit in the last quarter. And public shareholding is just about 12.8%, which is not big, not very huge. Even in that, Rekha Junjunwala holds around 4%. So it's around 8.8% public shareholding that we have. So overall, very good business to look at from a long term point of view. It's just that the valuations are stretched at the moment at around 72 times. So if I look at the PE, it's better to be bought at a 10-15% decline. So in market decline or in market stress, one can definitely look at, if you look at a 1 year performance of the stock, then around October, end of October, when the market started to fall, it fell from around 620 all the way to 570, 560, 570. So a 10% fall happened there. So if you get a 10-12% decline in a market fall going forward, that's where you can definitely accumulate the stock over a period of let's say next 6-8 months. And all hospitals and diagnostic stocks are doing well. You should be having some exposure there. That's my understanding. So this was my video on Fortis Healthcare. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon and WhatsApp. The membership link is in the description and on the last slide. So you can become a member on YouTube as well. Thank you.